That's tough, bro. Yeah, today's my rest day, bro. My body's like cooked.
I can feel you.
I bet. Do you know what trading view is?
No, I think I've been on Tradeovate.
You trade on Tradeovate?
Nah, I've just checked into it.
Oh shit. Alright, bet. Go to Google and just search up trading view.
Is it the
Or
trade
if you just
station?
want, if you want, you can just like also like just I can like share my screen. You can just like watch me.
Yeah, you can do that.
Rather do that.
Is it this black one, Trading View?
Yeah.
Should I make an account?
Yeah, I just like use a Google account or whatever.
I've actually never heard of this one.
Yeah, it's like for me, it's just easy. Like it's not tick based, but like it really doesn't matter. It's not the biggest deal. I
Let's see
haven't
if
had
it
any problems with it,
works.
but it's nice because you can like see like how much money you're dropping like with a stop loss and a TP. It's just like super easy to read. So
So did you buy like a membership?
yeah, I have the essential plan, but you don't really need to buy one.
Oh.
I just bought it because I wanted some more indicators. So I have right now I'm only using two, but actually wait, I don't even know if I'm on my plan anymore actually. I might have got taken off of it. I didn't pay it. um I bet. Here, I'm gonna share my screen so I can show you. Here, let me know if you can see that. You see my screen?
Yeah.
I bet. Hold up. Okay, here. Let me just go to. I was just back testing for a little bit, just because I was like tweaking my strategy. Let me go to this day that it worked pretty well. Or let me go to the Wednesday one.
I've
Maybe
learned
this one
about
will
the
be easier.
candlesticks and how the weights go up or they go down. Like this, these lines should be important.
Wait, say it again, Mel.
I've been learning about like the wicks and like the lines in a time frame when it goes up or down. Well, depending on the market.
Oh, nice, nice.
So
That
have
was
you
okay.
made anything from it yet?
From trading?
Yeah.
Nah, I didn't. I started like only like a month and a half ago, so like I'm still just learning. But like I've gotten close to passing my eval, but then I make like a stupid mistake and like I like lose a bunch of money. But okay. So on my screen it's like blue and gray, but like the blue is just bullish, which is just up, and then the gray is down. I just like this because like it's easy to read. Um, and then this right here, what you're seeing is just one of the indicators I'm using. It's called a fair value gap. So when you have like a smaller candle here, well, it doesn't have to be a small candle, but usually what happens is there's a big candle that spikes, and then another candle forms that's continues that direction, but it's usually not as big. But between the wick of this candle and the wick of the third candle, it's called a fair value gap.
Mm-hmm.
And price likes reject off of a big fair value gap, as you see it did here. It doesn't happen all the time, not even close. So you kind of have to use it in like a specific way. But basically, I'm on S&P 500, so it's called MES1. Basically, it's like the cheapest version of S&P. I just trade futures because like it's like the most volatile and it's like the best just to like take trades in honestly. But I do S&P because it's like a little more controlled. Like in Nasdaq, which is the other one that S&P it follows S&P basically.
Mm-hmm.
It's way more volatile, so like the candles are like triple the size and like it's so much easier to get like wicked out, etc.
Right.
Um, so I trade micro mini S&P 500, just a little better. So let me show you what I like to do. So okay, so there's time frames. Let me know if like you get confused. So these are all time frames of the chart. So like right now I'm on the 1 minute. So each candle is 1 minute of price action. So like this is 8:21, 8:22, 8:23, 24. Um, but in this time frame, price tends to be very like loud and like, random.
Mm-hmm.
So then I usually go 5 minutes. So now each candle here is 5 minutes. So that's 7:25, 7:30, 7:35, right? So this is where I kind of like assess the market and kind of determine where I think it's gonna go, and then I go to the 1 minute to actually place my trade. So here, basically, all I do, super simple, bro. You don't gotta overcomplicate it. So first, do I have it marked out? Oh yeah. Well, okay. Today's a little whack, but so so this green line right here, I don't know why it looks so weird. This is so basically, I'll just show you actually on the daily time frame. I like to mark out. Here we go. Perfect. So this candle here is today's candle, and then this candle here is previous day.
Mm-hmm.
So this blue candle, it's really hard to see, but this it's a very small candle, but this is the previous day. So this is the previous day low and previous day high, and we just broke above that high. So price is probably gonna want to reject back to this low. I mean, sorry, the high of that previous day. But usually it's like marked out for me. It's kind of weird right now. But hold on, let me fix this. Okay. But basically what I do is I go on the 5 minute.
Mm-hmm.
And it's all the time. So like right now we're at 9 o'clock. 9 o'clock in the morning, and then all the way back here is priced at. So this line right here, you see that's 6 o'clock of the previous day.
Mm-hmm.
So damn, holy shit. So that's price going up like an insane amount, as you can see. So someone took that trade and made straight bank, but it happened all the way down here. But
Holy.
basically, this is 6 o'clock yesterday, and it just shot up. I don't know what happened, but what I do is I take the range, so it's a previous day range. So this right here is a fixed range volume profile. So it basically just measures the volume from where you put it. So if I put it from 6 p.m. from yesterday to 8:55 of the next day's morning when I'm, getting ready to trade,
Mm-hmm.
it basically marks out the high of like the volume, so where the most volume occurred, and the low where the lowest volume occurred. And like there's a range that price like. So like if I go here and I mark out from here, oh shit, hold up, from here. So if I do 1800, 6 o'clock, then I come to 8:55, which is this candle here. Boom. So what this is? So this zone right here between these two white lines is a volume area. So price likes to stay in this area. As you see, it came here, tried to break below the low, rejected, and just came up here. And look at what's happening. Hit above the high here and came back down, right?
Mm-hmm.
So price likes to stay in this zone basically. So that's basically all you're thinking about. Um, so all I wait for, right, is so what we're looking at here is price is probably going to want to tap up here. So right, it's 8:55. So 9:30 open is when like all the volume comes in. So right here is where the volume will come in. So I play all the candles. So right here comes up. Nothing's really happening yet. And then
So how do you know when to buy?
once I'll tell you. So what we're looking for is we're looking for price basically to come to one of these levels, one of the white lines, right?
Mm-hmm.
So we're looking for it to come to the volume area low or to come to the volume area high and reject. So we just gotta wait basically. So it's probably gonna tank down. I'm gonna take a guess. Yeah. Usually so sometimes what I would do is me knowing that it just tanked down that much,
Mm-hmm.
right? It's probably aiming to come for this low and we get a rejection candle. So sometimes you could take a sell trade. So this is your order book here. So there's like units, right? So units is like so price is at 6,826. So units is like how many micros of that unit. It'll tell you on TradingView how much you're risking. So like if I risk 16 units and I click sell, right? So this is what happens, right? You have a stop loss. So if I put this up here, right? Basically, if a candle forms and goes and hits this zone here, right? This 500 where I have it, it takes me out of the trade, right? So I lose $560. And then you take profit is how much money you make. And once price hits away like past this zone, it takes you out of the trade and you take profit. Does that make sense?
Yeah. So the higher one is what it withdraws you, and the lower one is how much you take out.
Yeah. So when you're selling, you're looking for price to go down, and then you put a stop loss to avoid you from losing too much money. So like here, I see that price is clearly starting to shoot down. Four bearish candles, and then we get a rejection candle. So sometimes here, knowing that it's going to come down to this low, I'll take a trade
Mm-hmm.
and I'll set my TP, my take profit, to the volume area low, right? And if we let it play out, right? Boom, look at that. That's $1,600 right there. And then we let it play out. It's going to come down to this zone. You just got to wait, see what happens.
So
Sometimes
you're
it's going to take a second.
so you're looking for it to go
So I'm
down
just,
right now.
yeah, and I'm just clicking through the candles because we're in replay mode.
Mm-hmm.
So like I have to manually do it, but we just wait. We're gonna get a shoot down like that, and then look, see, and then watch is gonna hit my zone, and then boom, takes me out of the trade, and that's $2,000 in my bank. So now that's like a setup you can sometimes take. It's a little risky, but if you want to hang your balls out, then fuck it. But usually the normal trade would be this. So you see how this candle, right?
Mm-hmm.
We're coming down to this low. This here, I'll mark it up. We're coming down to this low here, right?
Mm-hmm.
So this is the body of the candle, and this is the wick. A wick is just where price previously went to and then came back, right?
Mm-hmm.
So here price came down, but then came back up, so it's just a wick down. We don't trade that yet. So what we wait for is we wait for price to break below. So we're gonna wait. Boom. So you see how the body of the candle is now below this zone
Mm-hmm.
right here? So that now we are below the zone. So this is sellers trying to break out of our volume area low. So sellers are basically trying to shoot down, right?
Right.
But what usually happens is buyers like to reject, right? So here we don't see a rejection. So because on the next candle we don't see a rejection of the buyers trying to break back above this low, right? That's our indication that we are probably looking for sells. But we don't take a sell position yet because we need some more confirmation. So what we do is once we see that this candle doesn't break above, we go to the 1 minute time frame. So usually when a candle forms down, right, and we break below, there's a fair value gap. So right here, this is the fair value gap that got formed in the 1 minute, this little zone right here. So what we look for is price to tap off of that zone, right? So we see price coming up. So boom, right here, right? Look what happens. We go straight through that fair value gap. You see how it disappears?
Mm-hmm.
So that trade's a no-go, right? So in that case scenario, we don't take a sell trade back to the 5 minute and we look what was. So now we see what's happening, right? We got some rejection off of the buy. Boom, shoots back above into our volume area, right?
Right.
So now what we're looking for some sort of fair value gap that gets created from this big candle here in the 1 minute. So basically you're looking at the 5 minute and we're basically looking at is price breaking below our low or above our low. That's basically it. So we see it breaks above, so we just go to the 1 minute time frame. And we're looking for a fair value gap, and boom, this is our fair value gap that got created. So now we're looking for a retest into that zone. We're looking for candle to hit. Boom. Candle taps the zone, right? So look, we're in that fair value gap zone. So now we know that this is a good fair value gap too because it's a really big candle. So now this is where we take our trade. So we put in for buys, right?
Mm-hmm.
Boom. And then our stop loss would come below this candle here. So the candle that created the fair value gap,
Right.
we're going to put the stop loss below it. So now we're at 240. And then our TP, I mean, you can target whatever. I just target random shit and I take out when I feel is the right time. I mean, because, sometimes like I just don't place a TP
Mm-hmm.
because like, sometimes it just shoots up and you can make more money. But let's just say we put a TP at this high here, right?
So you're doing a TP
Confirm.
up now because it's going up.
Yeah. So once we see that this hits into this zone, we just take a check real quick. We want to see where it's at the 5 minute. So look, perfect. Oh my God, it's literally perfect, bro. So right here, right? Sellers completely failed to reject back into this zone. And guess what? We created a fair value gap from this as well. So we're looking for buys. So we're gonna go back to the 1 minute. We confirm that we are good to take this fair value gap, right? And then we just let it play out. Hopefully we don't get wicked out, but we'll see. Okay, we get taken out.
Oh, because it went below.
Oh wait, my bad. That's on me. Hold up. I traded the wrong fair value gap. Hold up. This fair value gap, that's my bad. I forgot we're on the 1 minute.
Are you?
Don't make that mistake. Sorry, this fair value gap here is not the real one. This one's the one we're looking at right here.
Oh, okay.
My bad. That's the one that got created by this. But now, so are we taking a buy here? My bad. And then we put it here. You go to 260, and then we target this high. Eh, probably put a little lower actually. I'd probably put it like here, but
So when does the market open again?
you said what?
When is the market? Doesn't it open in the morning? The market.
Nah, nah, it's open all the time besides between like 5 and 6, and then it closes for a second at some time in the morning. So there's like different trading sessions. So from 6 p.m. to 8 p.m. is Asia session, but that usually just consolidates and does literally nothing, so no one trades that. Then there's London session from 2 a.m. to I think it's 2 a.m. to 5 a.m. is London session. London session tends to just shoot up one direction or down one direction, and then 9:30. So there's New York AM and New York PM. So 9:30 to like 12 is the New York AM session. And then the PM session is from like 12 to like 4 or something like that. So like right now we're trading New York AM, so 9:30 to 12. This is where I trade. But you see this rejection off the fair value, and then we just wait. So boom, we're going up, bang. We just let it play out. So we're gonna see how much. I'm just gonna let it ride. All these fair value gaps it's touching are bullshit. I don't care about them. There we go, perfect. So in the time span of, hold up. Sometimes it takes a minute. You gotta just wait. You could take out here if you wanted to, or you can just be patient. Or if you just wait, bang. So you basically we would have taken in right here at oh shit. So at 11:10. Yeah, sometimes you have to wait a while for a trade, but it's so worth it. Like, but basically at 11:10, and then you take TP at 11:35. So you wait what, 25 minutes,
How much
or you
did
could
you
take
take
out
out for
here and
that?
take $600. This was like an all right trade. You had to wait for a while, so I wouldn't say it was like the best,
It's
but
better than
we would
nothing.
have taken. Yeah, exactly. We would have also taken profit from this trade here, the one targeting the lows that we took right here,
Uh,
targeting all the way to this low. So we would have been up like straight bread. But that's really it. Basically, 5 minute time frame. You're marking out the volume from 6 p.m. from the previous day to 8:55 of the same day, right? And then you just have a range. So you're basically trading in between a low and a high. You're just looking for price to trace to one of the lows or trace to one of the highs. And then once it breaks above a low or a high, you're looking for a rejection back into the zone. And then you just switch to the 1 minute. You're looking for a fair value gap created. It's going to retest off the fair value gap, and then boom, you take a trade. That's basically it.
That doesn't sound hard, but it's probably harder than what I'm thinking.
I mean, when like you're actually live, then it's like it's a bit, it's a little different. But here, let me show you another example. Let me see if I can find a better example. Um, let's do maybe Tuesday is fine. No wait, I don't. I think I back tested Tuesday. What's today? Wednesday. Yeah, let's do Thursday. Let's do the next day. So we go to 9 o'clock. That's not 9 o'clock. All right, I'm gonna show you this one, and then I'm gonna go. But I can explain more tomorrow. I just got sidetracked today.
You're
Um,
good.
I bet. So boom. So basically, let's just pretend like we just hopped on, and we're looking to trade for the day, right? So boom, it's 8:55. The first thing we're gonna do is we're gonna take our volume. So we're gonna go here. We're on the 5 minute. Always be on the 5 minute. 1800. And we're gonna go to 8:55. Make sure I marked that right. Yeah, so you can see down here 8:55. Okay, perfect. So this is our range for the day. So right now, price is dead center. We don't know where it's going to go. So we want to wait for a big shoot up in a specific direction. If we want to trade that first little scalp. So it's just consolidating. We're gonna wait. So right here,
Hmm.
you could take in a trade right here if you wanted to. So look, right here, um, price, slightly rejects this big trend, right? And it's ever so slightly create taps into this fair value gap it created. So you could just take a quick little scalp, just put this at the fair value gap. Like you probably put it like, because this candle's so big, I just put this at the bottom of the candle, right?
Hmm.
And then just be up here because we know it's going to go up there. Already attempted to, right? And then just let it play out. It's probably going to create a massive wick. Okay, boom,
Holy.
TP'd. So right there we hit that high. So right there we just made $700. So that's lit. So then, boom, we just made $700, but we want more as we're greedy, right? So we're gonna wait for price to fully break above the body, not the wick, the body. So we're gonna wait. Boom, breaks above. Now does it reject? Nope. So it just wicked, it didn't close below. So what we're looking for is we're going to go to the 1 minute. Do we see a fair value gap created? Nope. No fair value gap created, so we don't want to take that because what's probably gonna happen is gonna shoot all the way down. Bang. That's why we don't take that. So we could have been like, oh shoot, it didn't reject. We buy, but then we would have gotten fucked by that humongous candle, right? That's why I didn't take it. So then we wait again. So boom, price now rejected below this zone. So now we're looking for a fair value gap that got created by this candle to take the retest. So we go to the 1 minute. So this is the 1 minute, right? Boom, fair value gap got created. We're gonna look for a retest of that fair value gap. Boom. So that's the fair value gap that gets retested. We're gonna confirm back to the 5 minute. Yep, failed rejection of that candle. So we're gonna go 1 minute and then we put our TP. Oh shit. Oops. Okay, cool. So we're gonna put our stop above the previous high, which was right there. Then we can put our TP probably like there. So you can do like a 1 to 1. Yeah, you do like a 1 ratio. So the reason that I'm doing such a small trade here is because price broke above, right? Originally failed rejection. Well, here, maybe look in the 5 minute. So like if price broke above originally and then failed rejection, we might still be looking for longs at some point. So, but I want to take a quick trade for a short position because we know it's going to go short, rejecting out the fair value. So I'm literally going to put my TP at the bottom of like roughly like around here at the bottom of the candle. Then our stop loss above this high. So we're just gonna do like we're gonna do a 1-to-1. So probably like right here, and we just pray we don't get wicked out. Just wait. We might get fucked here. Shit.
That's why I kept going up there.
Oh, well, there you go. There you go. That's when it decides to fucking go down. Cool. Okay. We were correct, but we probably should have targeted this high instead.
It's all a learning
That's where,
process.
like, if you're in an active trade where, like, you place your stop loss is, like, mad important, bro. Because, like, your trade could hit, right? So this wicked all the way down here. So we would have hit, but we just didn't put our stop loss. So, like, in reality, what we should have done in this situation is we hit our fair value gap. And then what we should have done is we should have lowered our units to like 12. And then we could put our stop loss higher at 390. And then our TP down there. But sometimes it doesn't hit. Not all the time. But like if you can if you have good risk to reward, if I win three trade if I say I win two trades out of the week and I lose three, right?
Mm-hmm.
But say like the three trades I lost a total of 900, but the two trades I won, I made a total of 3,000, right? That's still 2,100 profit. So you're
Mm.
still up in profit, even though you lost more than you won. You know what I mean?
Hey.
So you always want to have like a good risk to reward ratio. Like here, let's just go to a random ass day real quick. Oh shit. Here, let me see, just make sure.
So once you beat this evaluation, then you can start using real money.
Yeah, exactly. So for here, it's just hard sometimes. Like today was just like this day in April was just a weird day. Usually this doesn't consolidate like this, it just chooses a path. I don't know why I did that. But that's basically the gist of it. I can go through with you a little more. Um but yeah, it's basically the trade. Basically just looking for volume in the 5 minute, using that to kind of confirm a direction, then
Mm-hmm.
go in the 1 minute to take your trade and look for a fair value gap that gets tapped, and that's basically it.
Yeah. This looks fire. I'm trying to tap in.
Yeah, but if you want, just go on TradingView and just check everything out, change some colors up. If you want to change the background, you can go. Let me show you real quick before I go. Is that like the black background? If you go to your little profile on the top left and then you click right here, it says dark theme, you can turn it on. Um, but then yeah, so if you want to just check it out, the volume profile I was looking at, you can see it. It's on the left side. It's like that. It's like above where the brush would be. You'll see it on your screen, but you can mess with that. Um, but yeah, that's basically it. That's like the gist.
I'm seeing it so far, but I definitely want to lock in. Are you trying to do this, try and get
Yeah,
rich?
bro. I'm not gonna lie. It just takes a second to kind of understand it. Bro, once you get it, it'll be pretty easy to read.
I'm trying to tap in. This is the method.
Yes, sir.
Alright, I know
I
you got
bet.
places to go.
Yeah, bro. Just let me know tomorrow if you wanna hop on a call again. Just text me.
Alright, bet I'll hit you up.
I bet.
Alright, bro. Be safe.
I see you, brother. Yeah, you too, bro.
Okay, we